Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and here we are now on Monday. I almost said Friday, but we're on Monday, the 27th of January, 2020, just after 5:11 p.m. Central Time. So let's talk about today. Here's the one thing we understood, and you had to understand it going into today. On Friday, we knew that we had the outbreak that was spreading quickly of this coronavirus. We knew that we were going to get more information on it. What kind of information? We didn't know if the World Health was going to say anything, the CDC, China, or so on. What we now know is there's about 3,000 cases of it. We know the markets reacted negatively to it in the financial arena. And we know that the CDC is already in the area of developing testing kits for it. Testing kits are not virus control. Two different elements. But markets are forward-looking. Always remember that. We were up in some of the stock ratios where you were hitting 19 on the stock's earnings. You know what I'm getting at? We were getting ahead of ourselves. And people were saying, since the Fed took the markets back in October, that, maybe this is the new norm. Okay. So you get a correction. You don't have a 10% correction under your belt. You don't have anything near that. You've got a correction going on, and that's what we're going to look at. You're still in the energies having problems. Why? They're specific to the need that a lot of the factories that work in groups of people, China doesn't know if they can bring them back together. It's that simple. Yet they have to import. The refineries got to go to work. The factories. Do you bring the people back? They have now extended the opening of the Singapore Stock Exchange to February 3rd. They told kids February 17th is when they're going back to school. So they're taking the lunar holiday, they're extending it out wisely to prevent crowds from coming together. And it's control to a degree, but it's not a solution to the other part. We still know, you don't get away from this, that so far the cases that have been found, the ones that have been disclosed to the public, have been all people that have been in the provinces in China where the disease is. I'm talking that Wuhan and its immediate surrounding area. Nowhere else have they found that it's started person to person. Each person within China, each person that's a non-Chinese citizen that traveled there, that has gotten the disease, that seems to be what it's done so far. That's a good thing, not a bad thing. Let's see how the market reacts. The one thing we can see is that we're off to a heck of a break. You're down 1.49% this week. You were down last week 0.95%. So the whole correction on a weekly chart is 2.5%. I mean, that's why I take it in stride. Each time we've gotten back to this 18-week average, and I'm not saying you're going to get there, but each time we've gotten there, it's turned out to be something of a support zone in the market. It doesn't have to hold right on that on a closing basis. Charts look different when you get to dailies. As you can see, today's action, actually this is today, remember I'm doing this now after 5, so we're already into Tuesday's action. The low on Friday was 32.80.5, and the high today was 32.69.75. We have a gap in the chart. If the market were to create another gap, which it has not done, we already see where we're at tonight, you could have had what's called a breakaway and then runaway gap. It's not what it's doing. The market is instead pulled down, trying to find its footing, if you will. Okay, what's the action on the chart? Well, when we come to the swing line, it's bearish. You've had the market without today. This is what you looked like Friday. I'm going back to Friday because I did my weekly charts on Friday. These are the daily. Lower highs and a lower low. You had an outside day down. So you had already the market had turned itself down. Today you had the gap, and tonight you're getting this bounce. What about moving averages? You fell down on Friday. Let's get back to it. Challenging the 18-day average. Today you slid through that, getting a bounce. Your other key averages are fairly far away. Now, for those of you that get my twice daily written updates, this morning I wrote to you about the lower Bollinger Band numbers in all the stock indices, and market at that point we took a look to see where they were. I said, if you break down, look for the 32.15 area to be a potential support zone. Doesn't mean it has to go there. It's one of the support with resistance back at the 18-day average of 32.80. The next thing I looked at was momentum, and it is down. When you lose an embedded reading right here, which you did not lose on Friday, you lost it today, you already hit the objective. So it turned down on the same day and went to that 18-day average. Gapping it doesn't mean anything to me. It went through it. That's the key. Now the next objective, if it wants to reach down further, could be this 32.15 area. In the NASDAQ, let's go back to Friday. On Friday, you'd already had your outside day down. Momentum was still up. You gapped today, hit the 18-day average, and tonight you're trying to get back to it. Should the markets get another piece of bear news on this, I don't think pandemic is the right word just yet, but it appears that's the word that it's going for. Then wherever that Bollinger Band comes in is another support layer. Resistance, the 18-day average of closes. Let's go to the Dow, because I was again writing about it. Going home, you had the lower highs, lower lows. You knew as much as anybody else going home. Are they going to say things are getting better? They say they're going to get worse. How's the market going to react? You knew you were going to get some piece of news over the weekend, and when the markets reopened on Sunday, you had to be cautious. I'm sure I would have said that. Market drops down today. It's 28,405. The lower band is 28,370. Let's call it 23,880. 28,380. Let me get my numbers here. So you're very close to it. Not sure if you'll hit it or not, but you can see you're knocking on the door. What's the trend? Down. The pros probably sellers at that 18-day average until you take out those numbers. Then we get to the Russell. So here's how the Russell looked. Let's finish that up with Friday. On Friday, lower highs, lower lows. You're already under the 18-day average, unlike the others. Therefore, your next target could be, doesn't have to be, first the lower Bollinger Band, and if that gave way in a big way, maybe back to the 100-day average. If you were to take out the outside day down number, then you got a bear trap and you can go back to the upper Bollinger Band. The market today comes down, hits that, and you can see where the bounce is. So my point is, you don't lose your cool. You understand that stocks are not in a big decline here. It sounds worse than it is. They got ahead of themselves. And so far, it has still been the case where the economics are okay. It's China, China, China. And unfortunately, there's a lot of countries that depend on China, and I can't imagine their GDP isn't going to get hurt by, could be 10%, 15%, whatever they were looking for a number. If they're looking for 6% growth, they could lose a point on it. They lose all this travel business during the busiest time for them of the Lunar New Year. Macau is shut down, the stock exchanges are shut down, travel is shut down, and we don't know when everything's going to get even semi back to normal. They're telling you a story that they're building 2,500 beds, to the fastest hospitals I've ever seen going up, and they only have 3,000 cases. Yeah, you believe that? Number's going to grow. That's my guess. When I look at the cash VIX, normally I would tell you I think the pros are selling into a Bollinger Band. Not in an event like this. I think the pros pull back and they go, they're not going to write puts, rather calls against this. You don't know. We all knew Friday going home that we were going to hear something over the weekend. I'm not talking impeachment at all. I don't think that's moving the markets one way or the other. I think this is all the virus that the market is looking at. Ultimately, I think we're getting ahead of ourselves on the VIX, probably in the stock market too low, but I don't know where those numbers peak out or bottom out. In the bond market, you're running on a panic over the upper Bollinger Band. So are you going to take these markets, this market and the 10-year notes, are you going to go back over here into this 144 area? You could. Don't fight it. I mean, here's your dilemma. That they come out and they say tomorrow they got another 1,000 cases. And that more, what do? You got to be careful with this. You got to have your head about you. looking about what's going on. I have certain rules that I pay attention to, having been in this now 5 decades plus. And when you're over a Bollinger Band, I'm just not interested in buying. When you're under it, I'm not interested in selling. I still expect that the pros will do what the pros do. In the dollar index, you have an embedded bullish reading, number one. Number two, the swing line is up, bullish, bias up. So if this market wants to finish towards a move, the upper Bollinger Band, 97.84.5, looks to me like a resistance. Support on ways back down could be at 97.35. And I think on a bigger break, you'd have to look hard wherever that 18-day average is to see how it holds up. In the Eurocurrency, you're tracking the lower Bollinger Band, and notice how you're being very orderly about this break. You're staying to the right-hand side. Europe's in a worse case scenario than the United States. They trade heavier with China than we do. Therefore, they're more exposed than we are. Other currencies are too. Lower highs, lower lows, running the lower Bollinger Band with an embedded reading until it's over. It ain't over. What else happened? Look at these moving averages. This is on Friday. This is the close of business today. You still had the 18 over the 100. This is the reopening tonight. Now you got another piece of news. Now, normally what I look for is the market to make a lower low on that. Don't know if it'll happen, but that's, as a chartist, what I look for. I see no trend in the British pound. I see a higher high, lower low. I like what the Brits did. They estimate 1,600 people had visited those provinces where they found the Wuhan virus, and they told those people that because they've already been in the country and gone through the airports, do home, and this is smart, do home isolation, don't let people come over, watch your temperature, something happens, call their medical services. Makes all the sense in the world if the people will do it. In the Japanese yen, well, you're buying this because of these problems. And the market's been on a tear to the upside. It followed through today from Friday's action when the market got up and finished around 91.77 or so, jumped up today, and tonight the market's stable. If it rallies further off of news on that, 2 resistance points here, 92.78 to 85, support 91.75. Bitcoin. Is that it, the correction in Bitcoin? I don't know. The market had lost the embedded readings back here. Normally it means a challenge of price in the 18-day average. It certainly did that. It didn't hit it. I like when it hits it to finish it off. It certainly got back up nicely. It's overbought instantly, so the question is, what's going on in it? Now, we know that each day that goes by, we get closer to when these people that play Bitcoin are looking for that halving. When the algorithm says that with all the work you're doing, you got to put in more work, and we're only going to build another half of what you did in Bitcoins. In the Brent versus WTI, okay, who buys most of that oil coming out of that area in Brent? Well, it's out of China, and there's fears here. So you see it losing suddenly to the WTI. Here's how Brent looks. It's trying to get back to the right-hand side of the Bollinger Band. It's certainly got the embedded reading. It's fallen apart. It has gone from 72 down to the $59 level. You know, that's quite a break. Now what is OPEC going to do? Because it's one thing to cut production. It's another thing with lost demand. I think like everything in life, you get over these things. I think science can handle this. It's a question of getting your arms around this Wuhan coronavirus. I have a hard time saying that. In the WTI, you're already getting back over the band. So you panicked. You came down, rightly so, and you're getting your bounce. You're $52.50. We saw last week that we did add a rig, but big deal. The question is, at these prices, it's not as rich for the producer at 60 as it is at 52, obviously. Gasoline. All right, gasoline, in my opinion, I'm really keen on this one. I am looking for it to get back over this lower Bollinger Band and to somehow in here make a statement that going into the spring it's getting too cheap. Are we there? No, that's not what I'm saying. I'm interested in after the fact, not predicting this. All right. I'm also watching the 18 and the 100-day average. I'm watching the downtrend and the embedded reading. Lose the embedded reading, and then I start to get excited, like I had done in my gasoline report a while back. Which, by the way, no part of it hasn't yet been proven wrong. This is still the break that we're getting, and the seasonal time frame certainly got screwed. In the sense, and I hate to use that word, I don't mean it as a swear word, but it definitely got screwed up due to this virus that came out, all right? It just threw everything for a loop. Natural gas, going sideways here. Now, this is what we have to key on, the embedded part. Both numbers are under, and I want to go to Monday's close. You can't count Tuesday yet. Both are under 20, both under 20, not under 20. Today, the Tuesday trade session, remember while I'm talking to you on Monday night, the Tuesday trade session, what's it going to do? Is it going to embed? Does it lose it quickly? Not quite certain. It's in a zone where it's very interesting. Is it too cheap and due for a bounce? Don't know. What I do know is living in the Midwest, we are going to be right on through into the first week of February, every day, 5 to 6 degrees warmer than normal, and that temperature does move from our area east, sometimes northeast, sometimes straight east. We'll see what it does. Our research. If you like what I say, you should take a look at our research. It's free for you to look at. You can see what our clients get to trade through us. You can go to our website, see it there. You can see our free offerings, our charting software, and what we offer. Take your smorgasbord pick, do something, and I'll see you tomorrow. Take care.